Let's bring on our next guest analyst, Mr. Craig Bolanos. He's the co-founder and wealth partner at VestGen Wealth Partners in Chicago. Craig, thanks for being on. This is kind of stinky.
Oh, Scott, I'm holding my nose. Mark this day right here in September when Craig Bolanos stops betting on the over. I'm going to start betting on the under because I think this is just the beginning. This data was soft. Even if the market thinks they like it because it helps spur those rate cuts, the market isn't going to like it because this is a prelude to a potential growth scare coming. We've been in a market that you and I have talked about now for a couple of months based on all the employment revisions that it is a no hire, slow to fire. No hire, slow to fire. Well, the problem is you start with no hire and slow to fire, and then you go to no hire and you move to fire. That's what I'm worried is going to be coming in the future down the pipe. I am happy we're getting the Fed rate cuts. I don't think it's too late. There's now a guaranteed 2 rate cuts as a result of this. As far as I'm concerned, I've been calling for it all year, but this is a big disappointment. Big disappointment coming in soft today. And it's the first report since President Trump removed the person in charge of it.
Yeah, I say it a lot. The guy that's now in charge of the Bureau of Labor Statistics is a gentleman by the name of E.J. Antoni. And EJ's been on our show, so he's a guest on the Cow Guy Close. So he got whisked away to something bigger and better, and hopefully we can start to rely on these things. We are growing, but 22,000 jobs is a big miss from 75,000 expected. It looks like we revised up last month a few thousand jobs, so nothing shocking there. I'm going to look at it over the break. But there is an issue here with, ConocoPhillips firing 25% of their workforce. I don't know if you saw that come out yesterday. But we've got these productivity gains, and the productivity gains are going to make, hiring a little bit of a problem because of artificial intelligence. That's something that's going to absolutely start to bite. I don't know if that's what we're seeing now, but there was a guy on our show. I don't know if you know who Ray Wong is, Craig, but he's a preeminent expert on when it comes to IT and AI. And he told me to go to a website called tinyteams.com or .xyz. Sorry, tinyteams.xyz. And it's like an all-star board of productivity where you've got, say, 20 people or 10 people doing annual recurring revenues of $200 million. 10 people doing what 1,000 people used to do. And I think that's going to be more of the same. I think that's going to be something we're going to be looking at going forward. What do you have to say about that?
Scott, no, it's 100% real. I mean, everyone acknowledges that they're using bots at work, but you mentioned ConocoPhillips. You didn't mention Salesforce. Look at this. The AI. Here, I tell my kids, I got a 22 and a 24-year-old. I keep it this simple. AI is not taking your job yet, but those who deploy AI will take your job. I mean, you will be rendered irrelevant if you are not evolving and not adapting. And the concept of slow to fire, no hire, again, why are we even doing the firing? We're doing the firing because we're freeing up money to invest in AI, which will eventually take more jobs. This trend is here. The issue is we're just in the infancy stage of the trend. You're already seeing it roll through enterprise software, all forms of coding. That's happening. So I don't know. Shout out to Mike Rowe. He's probably listening to your show, Scott. I guarantee you that guy's a fan. But, he's smiling at this because he's reminding everybody the trades are viable, manual labor is viable, and actually having real-life skills, not just tech skills and communication skills, boy, that's what it's going to be about in the future.
Yeah, you're right. They've been writing about it. We talked about it on my show yesterday. That's the administrators at a lot of these big education places, these big schools across the country are talking about this enrollment cliff. I think it was in 2010 we had 18.1 million kids in college. Now it's down to 15 and change. That's a lot. And so in percentage terms especially, there's definitely a shift happening, and I'm sure a lot of it's due to the fact that we've got a lot of kids doing what Mike Rowe would like them to do, going to the trade schools. But we also have our birth rate slowing, which is another problem for the economy.
That's the shift that people need to talk about. You talk about the enrollment cliff. We just peaked for this fall. All the kids who just went back to school, college, I'm talking about undergraduate college after Labor Day, this is the age wave demographic peak. Every fall from here on out, there will be less people going to college, not necessarily because they're choosing not to go to college. There's just less kids. There's just less kids. Colleges are going to be competing for a scarcity of asset. That scarcity of assets is going to be enrollment. So some would argue that while I'm resisting and talking about AI, artificial intelligence, and all the permutations that come from it, maybe AI is arriving just in time, Scott, because we have a birth rate population issue in this country. And if we're talking about investments, heaven knows it's all about productivity. Sounds like all of this is lining up just in time. I just don't know if society's ready for the changes that are going to impact everybody. But from an investment theme, if I could, number one, rebalance those portfolios, everybody. I know we're at new highs. Well, we're off the new highs now. Make sure you're going ahead and rebalancing your risk budget. Number two, if you haven't already locked in, it's last call for all forms of yield. Last call for all forms of yield. The rate cuts are coming. Lock in your coupons. And number three, please pay attention to the large mass amount of asymmetrical risk concentrated in a couple of names of the S&P 500. I don't think the economy's rolling over, but people need to use this jobs report today as a wake-up call that there is a growth scare that can be coming.
Yeah, and I'll end on this, a little food for thought. I used to work for a Japanese bank in London, and I was there when they had their birth rate slow considerably and their population stagnated. And guess what happens when that happens? Your stock market does too. You're not giving birth to more customers. That's a problem. So people need to kind of take that on board. When you don't have as many people, it's hard to see those stock market rallies. So we'll see how that all shakes out. But you know what? Always great to have you on days like this, Craig. You've got the best slot on my show, so appreciate you coming on. Always great content. Craig Bolanos, he's with VestGen Wealth Partners. He's a co-founder and wealth advisor up there in Chicago with all those folks. All right, we're going to go away. Remember, 855-776-6147, 855-776-6147. Give us a call or give us a text. I'm ready for what you want to talk about. We're going to open the lines up for the next two segments right after this.
Go old school for new spots. I'm Scott Linden, out and about with a tip from my Upland Nation podcast made possible